where we will be talking about the education sector. As we have seen in the previous section, there are some sectors which were traditionally the purview of the government, of the state, that has become increasingly privatized. So a number of private sectors investors have entered this space, either by financing and operating public schools. So they still, by building, operating public school, but still with receiving a grant or receiving with their cost covered by the states under long-term private public partnerships, PPP or P3, okay, or outright operating independently from the government. Yes, still coordinating with the governments in terms of educational standards, but really operating as pure private sectors entities, addressing their services directly to the general public without any form of subsidy. Now, in the education sector, we find primarily two types of assets: schools and student housing. Now, schools are less prevalent, I would say, in developed markets, whilst in emerging markets they are more. They appear more often as an investment option. It's not very easy to open a private school in developed markets. There are only few countries like Switzerland where these schools are there. But when we go to higher education, like university education, then it's more common to have the possibility of investing in a school. Although by and large, the universities tend to own their premises. You do have some opportunities where the university will, it's a little bit running short of cash, so they will call a real estate of investors to develop basically the main school building, and they will lease it for 50 years. Okay, there have been, especially in the UK, Australia, New Zealand, public-private partnerships. Okay, where the government commissioned the private sector to build schools and to operate them or to maintain them. Okay, with the government operating the premises for 50 years, 20, 30 years, at the end of which the school goes back to the government. The problem is that the operators were very conservative in the assumptions of depreciation. So they made sure that when they set the price to the government, they were getting back all their money with an extremely good profit. And after 10, 15 years of experimenting with this model, the governments have realized that probably they were overpaying. Okay, and they have stopped granting this type of contract. Certainly in the UK, this they call the PF5, Private Finance Initiative, has gone into disuse. So, but these assets are still there in the secondary market, so it is possible still to buy, maybe indirectly. For example, there are some listed infrastructure company that own these assets. So it is possible to actually own these assets and have the security of income and return of capital from the government. But the returns are quite low. Given the security of the income stream, these assets will typically generate 5-6%. So it's good to keep in the portfolio for private individuals. For institutional investors, at this level, it becomes more difficult. But if an institutional investor enter into the asset at the very beginning, yes, they will be sitting on very attractive cash flows. The student housing sector, conversely, is where most of the private sector investments is going. So there are typically, to have a residential asset related to student, it's just a plain vanilla investment strategy that many private landlords have been doing. But student housing has been gradually becoming a more defined product, if you want to refer it that way. And in some cases, it's right on the campus. The universities, especially let's say in the US, they build these dormitories in the 50s and 60s to accommodate a large number of students. But then these dormitories really became old and needed to be replaced with more modern type of accommodations. And this is really when they started needing the private sector to intervene, because the tuition fees that they were receiving were not really sufficient to finance the construction and the refurbishment of these assets. There are, of course, also off campuses, but very well connected properties dedicated to students. And because typically universities are located far away from the primary residence of the students, this have also given some form of, if you want, reassurance to parents who are sending their kids from home that they are really living in a safe environment. So these assets are becoming more and more like mini hotels and mini communities, because obviously they are dedicated to students. Students don't mix up really with business travelers, and there is an additional level of security on the premises. During COVID, something that also emerged was the need of having a proper mini apartment, because you see many students were sent home because there was they had access to shared bathrooms, okay, the old type of properties. So because isolation could not be guaranteed, they had to, the student halls had to be shut down. So now, on the back of that experience, the view of the universities, of the student, of the real estate investors, is that the ideal property is a micro apartment with self-contained micro apartment. So that is where the direction is going. Of course, there are various degrees of properties. There are some properties that are addressed to a certain market, and other properties that will go for typically for overseas students who are paying full fees, and they will want a different type of accommodation standards. Now, why invest in this sector? Why it has emerged? For a very simple reason, because higher education pays. So people are investing in higher education, and the demand is there. So here I've taken statistics from the US Bureau of Labor Statistics on the median for 2020, but things have not really changed much in 2021. The median weekly earnings of people with different degree of educations and unemployment rate. So it's obvious that in general, a doctoral degree, a professional degree, a master degree will command a higher salary, higher than average salary, bachelor's degree, than people who do not have, than the salary then of people who do not have a higher education. Okay, and similarly, the unemployment rate is lower. So the case for a higher degree is self-evident. However, one trend that is emerging is that not all degrees are equal. Okay, so as more and more people have received a degree or higher education, their ability to find a job, their ability to command a higher salary has also diminished. And it has been associated to the ranking of the universities. So here I've taken the top ranking of university by salary. And it's obvious, the MIT, the Harvard Medical College, the Princeton University, they are commanding a higher degree. And if you eventually go lower and lower in the ranking, you can see that the salary and prospect of employment of graduates from low-ranking universities it's not really that different from no degree. So there is a polarization in the market towards the top-ranking universities. And in fact, the lower-ranking universities are moving to online learning. So yeah, you want a degree, why invest or on on-campus learning, so living away from home, spending lots of money? You can study online. Okay, so student accommodation requires on-campus learning. Okay, so when investing in student assets, it is extremely important to bear in mind the ranking of the university, then the property service, and also equally important, the dynamics. Okay, the dynamics of the outcome of the higher education. So again, it's not an easy sector to invest. So finally, I don't have a slide for that, but final comment. There is a consolidation going on in the student housing sector. Before, it was literally mom and pop, individual landlords, just renting to students, maybe putting some ads in the student halls about the availability of accommodation. In this today, increasingly there are specialist student housing operator like Nido, for example, in the UK, where they are building brands. Okay, and that brand is associated to a certain quality, exactly the same as the hotels. And there is a consolidation going on in the market. So there are big private equity firms like Blackstone, big listed asset man. Actually, even Blackstone is listed. Anyway, Blackstone, Brookfield, they are building huge, massive portfolios of student housing, and they have their own operators. So this is a very specialized standalone sector where there is a lot of active management required. There are very few properties which can be leased for 20, 30 years to a university. So it's a sector that really requires active management and alignment of interest with a well-known operator.